Alright, thank you guys so much for tuning into today's live stream. Today is March 18th, 2025, and thank you guys so much for tuning in. So to begin today's live stream, I do want to take a look at the economic calendar here. So it's a Tuesday. We don't really have much news here. We don't really have any red folder news. All yellow folders here today. So let's see. Housing starts is essentially an annualized number of new residential buildings that began construction during the previous month. Right, so we began building about 1.5 million houses. Not too bad. Well, yeah, I mean, the cost of imports is going to increase now. So we don't really have any red folder news today. Coming into today, the draw of liquidity here, I wanted to see us take out previous day high, but the one thing that I'm not sure of, right, is notice how we are disrespecting this 10-hour fair value gap, right? If previous day high was the draw of liquidity, we should have been respecting this inefficiency here on the 10-hour time frame. However, we aren't doing that, and it appears that we're most likely going to take out previous day low. So here's previous day low here. Oh wow, actually, it looks like we might actually take out previous day low here on NQ and have some sort of SMT. Okay, interesting. So here right now, with us taking out previous day low here on NQ, if we do, that would be an SMT, right? Because notice where ES is compared to NQ, right? There's a pretty large difference. So ES, the range that it needs to make is relatively larger than NQ, right? NQ is relatively closer to its previous day low. So there could be an SMT here coming into this morning, something that I do want to watch out for. But yeah, so going back to the daily objective, like I said, this daily candle here was suggesting higher prices, right? However, with confluences like this weekly fair value gap that we created right here, and how I explained to you guys yesterday that I wanted to see it be treated as a breakaway gap, that idea right now holds true, right? I don't want to see prices trade up into it, which makes me a little bit reluctant to favor higher prices, right? To favor previous day high. And like I said before, we also failed to respect this 10-hour fair value gap here. So if we were going to take out previous day high, we should have respected this 10-hour fair value gap and pushed up higher after trading into it. However, we failed to do that. We didn't respect it as of yet, and it appears that we're going to take out previous day low. If we do end up taking out previous day low and having an SMT here between NQ and ES, I'm actually going to elect to sit on the sidelines today, and not really force anything. You know, there's not really anything for me to like kind of force here coming into today. Yeah, like I said, coming into today, pretty neutral. Kind of just, just waiting and see. I do want to see how we close here on this 4-hour candle, however. I want to see how we close here on this 4-hour candle and 8-hour candle, because once those two time frame closes, I'm actually going to have an objective, right? Every single candle has an objective, such as the daily. So yesterday's daily objective was previous day high. Same thing here. Same thing here on the weekly time frame as well. So the weekly time frame, I want to see us take out previous week's low. Treat this weekly fair value gap as a breakaway gap. Every single candle has an objective, right? Practice is fractal. So coming into this morning, once we close here on this 4-hour fair value gap and this 8-hour fair value gap, once we close, I am actually going to have an objective in mind, right? I'm going to have a reason to see lower prices or higher prices. So depending on how we close here on the 4-hour candle and how we close here on the 8-hour candle will tell me if we're going to continue lower or maybe continue higher. Who knows? Depending on how we close. So let's just be patient and not really force anything here. The first 15 minutes of market open, we did push down lower. Interesting. It looks like we're about to take out previous day low here, so watch out for that. If we do end up taking out previous day low, yeah, I'm going to be really neutral coming into today, right? Because of the S&T, and if a model or if none of my components show up, then I'm not gonna force anything. There that is. Oh, here. It looks like we're about to take out previous day low. I say in the next 30 minutes or so, I want to see us take out previous day low. I guess next 18 minutes, because I want to include the next 15-minute candles too. But yeah, going back to reading this article here. So the previous article I read, I guess it appears that we're going to begin to have battles again, conflicts in Gaza, where I believe Israel just initiated a airstrike or whatever on the Hamas, and that having a casualty numbers of, I guess, the highest casualty numbers since like 2013 or 2023. Casualty, right? That's how you say it. But this next article here that I'm reading is what Jerome Powell, the chairman of the Feds, is going to have to deal with here. So he's dealing with a lot of murky and unclear information, right? With the tariffs. He wanted to cut interest rates. However, with the tariffs going on, inflation is continuing to go up. So now he's going to have to pivot, and I'm not entirely sure what the Fed wants to do now. We'll see. So if the Fed does cut interest rates now, it's only really going to be because the economy is getting much worse, said Dario Perkins, an economist at Global Data TS Lombard. Fresh on Fed officials' minds is how they misjudged inflation when the economy reopened from the pandemic in 2021. Back then, officials initially believed rising prices would pass as supply chains healed. They ultimately abandoned the transitory thesis and began raising rates. Trump's Treasury Secretary Scott Bessent said recently that Fed officials should treat tariff-related prices rises like they did at first in 2021. I would hope that the failed team transitory could get back together and think that nothing is more transitory than tariffs, he said at luncheon. If inflation accelerates in the months ahead, officials could parse the guts of inflation reports for signs that tariffs, as opposed to an overheated economy, were driving up prices. We call that signal extraction problem, said Fed Governor Christopher Waller in a recent interview.
Is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path.
You get this data point and you're going to find the signal of what's fundamental and what is
trade policy.
maybe tariff
around the
noise.
changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. If you look at where forecasts are, look at the blue chip, look where everybody's forecasting some inflation effect from tariffs. So it's very likely that if tariffs are imposed, and let's remember, we really don't know what's happening yet. We're at a stage where we're still very uncertain about what will be tariffed, for how long, at what level. We're going to have to wait to see all of that. But the likelihood is that some of that will find its way. It'll hit the exporters, the importers, the retailers, and to some extent the consumers, and we'll see what that is. You would want to also be sure of a couple of things. One, just
No, I did not mean to click that. Well, Trump's election ricocheted through the Fed even before his inauguration. Michael Barr announced in early January that who is this? Michelle Bowman. Is she going to? She might become the next. She has a completely different view with Jerome. Interesting. cutting rates because because inflation might be getting better does not seem to be the case anymore. All the administration says is Alright, let's go back to the charts. So it does seem that previous day low was taken here on NQ. Rather interesting here. And so now we have a market structure shift here on the 10-hour time frame. So notice how when prices trades into this 10-hour fair value gap, we respect this inefficiency. We trade higher, we break past a swing high, and then if we do trade below this swing low again that broke past this swing high, then this would be considered a market structure shift, right? We use this inefficiency as a kind of like a stepping stone. So once we get past the stepping stone, this would be considered a market structure shift, and lower prices could be very predictable, right? Same thing here on ES, but we have an SMC divergence as of right now between ES and NQ. So if ES doesn't catch up and take out previous day low, then there would be a SMC divergence between the two indices, and I would be a little bit wary of prices. But so far, we still have about 6 minutes left until we close. So let's just be a little bit patient and just wait, right? Let's see here, so very interesting. So far we did trade back into the discount of this daily range here. So if you guys were looking, paying attention, you guys would have seen me messing, kind of toying around with my tools, and it looks like we did trade into discount here. So discount's gonna be that green box, and we are within it right now. So technically we have already traded back into discount of this daily range. We could end up trading back into the OTE levels as well, so at the 0.2 to 0.79 of the daily range. There's a 2-day time frame. Let's look at the 3-day time frame. 4-day time frame. Okay. See, we have 3 minutes left. Depending on how we close here on this 15-minute candle is going to tell me if we're going to treat this 15-minute fair value gap that we create as a breakaway gap or not, right? So if the 15-minute candle closure, if this current 15-minute candle closes below this red line, right, then I would treat this fair value gap as a breakaway gap. But if this current 15-minute candle closes above this red line, so let's say that we close up here, right? If we close up here somewhere, then I would actually treat the 15-minute fair value gap here as a gap that gets rebalanced, meaning I want to see prices, trade up into this inefficiency to possibly trade lower. But with the way that we're looking and how we're probably going to close below this red line, if we do that, then I would treat this 15-minute fair value gap as a breakaway gap. So just some insight there for you guys. Nothing too crazy. About a minute and 30 seconds left. Isn't playing catch up. $16 seconds left here. And notice how that 15-minute low is the same low as the 4-hour low. Because the 15-minute low is the same as the 4-hour low, I could see us complete the 4-hour objective within the next 15 minutes. So we did end up taking out that 4-hour low within the next 15 minutes. So there's that 15-minute low, same low as the 4-hour low. We completed it. So now we no longer have an objective, right, on the 4-hour time frame. and the 15-minute time frame, etc. Same thing as the 30-minute, the hourly. So now here I'm actually just going to sit on my hands, not really force anything to happen, because I don't have an objective anymore. Here I'm gonna just go over some of the pros and cons here with you guys, and probably just call it a day. So coming into this week, because I didn't stream, or because I haven't been really present in front of the charts here recently, I'm going to allow myself this week as a kind of like a rebound week, right? A week where where I begin to implement those consistent daily habits and just kind of like rebuild myself, right? So the first thing here is consistent models. Taking consistent models, being able to identify what my higher time frame objective is, what my model is going to be, and what my entry pattern is, right? All three of those components are what I require in order to actually press the trade button. If those components aren't there, then I'm not going to force anything, right, onto the markets. So, key takeaway: consistent models. I want to find that consistency over and over again. Okay. Second, being patient, being extra patient coming into this week because of, I guess, my vacation from the charts. I don't know where I'm at mentally. I don't know where I'm at psychologically when it comes to trading. So I don't want to, go into this week with the basis that I can just be back to normal, right? I'm going to allow myself this week to be a little bit more patient and not too rash. I don't want to force anything to happen. I don't want to force the trades to happen. I'll let the trades come to me. I'll let the markets dictate that. But I'm simply an observer. The information that is given to me is neither bad or good. I am in control of what I am in control of. I can't force anything. Third, like I said before, allow this week to be a rebound week. Kind of using this week as a time period where I can begin to like slowly press on that gas pedal and get the ball rolling, right? It's that initial push that I need to begin to get everything in rhythm again. So yeah, and some of the things that I can continue to work on, like I said, do not force trades to happen. Just let things come to you. Here, right? You can simply just prepare yourself. All you can do is prepare yourself, which is what I'm doing right now. I'm mentally preparing myself for any tasks or situations that may come in front of me, but I can't force things to happen. So that's just one key thing that I need to continue to work on. Second, every single day I should be able to identify and I should be able to journal something new that I have learned, right? So today I could talk about how Jerome Powell, he's facing internal difficulties within the Fed, group, and having some misaligned views with the executive branch, right? That's something I can note. So just noting something that I have learned, something new that I have learned is key to growth, right? So some improvements here. Taking consistent trades, like I said, I should be able to identify what a higher time frame objective, what my model, and what my entry is going to be. If I'm able to identify all three of those components. Yeah. 11:45. Not forcing anything, just going back to consistent trades, right? So taking those consistent trades, right? Second, be patient. Don't force anything. Allow the markets to come to you. And third, like I said, note and journal something new that you have learned, right? Knowledge is something that cannot be taken away from you. If you are stripped of everything that you own, any materialistic things, right? If you obtain those things with the knowledge, then you can get back anything. You have the world is, you're limitless, right? If you just understand that knowledge is something that cannot be taken away. Alright, and it seems with that, I'm probably going to just call it a day here. Call it a live stream. Thank you guys so much for tuning into today's live stream, and until next time, be safe.